term of the return. So where we are so far, because this is our starting point for today. So let's start from the return instead of coming from the presentations. Of course, I'll come back to the presentation. And I appreciate be on time and be consistent. So let's take the learning part together. So today, as I mentioned, our learning is for the elections. The next step is election. The theme we covered so far, and this is from where I'm gonna start. So which are the elections? So realization base is one of the election. This is the same screenshot we pull from the city return. It will be same way it will be appearing. So the first election, what is the realization basis? Yes, of course, we will dive and understand. This is the very detailed topic with the example. But here, understand what is realization basis election. Again, if we see here, the mention is the taxable person. Now, FTA give the option for the election, elect, because mostly we feel people saying, what is the election? How it will be look like? How will opt for that? So here, if we put yes or no, then elect to use the realization basis. We want to use the realization basis or any other. So normally, if we say yes, it will open the further one and two. If we say no, then the below these two field will not be open. This field not be open. If in case we opt for the no, this will not be open. But here, as we seen, yes, okay. If yes, then these two fields will be open. And then we are saying, first we have to check this taxable person is a bank or the insurance provider, because the rules and regulation for them is a different. For bank and the insurance is a different. If we say no, these are the standard. Then here we will have the two options. All asset and liability are subject to fair value or impairment accounting. So from here we have to see all asset will take on realization basis or only capital account. Only capital account. I believe my voice is fine. I'm trying my level best. Okay. This all assets here, if you all assets, the difference you have to understand. Here mention only capital. Here mention only capital, and here is all asset and liability subject to fair value. So fair value and impairment. Here all at the end of the tax period. See, these are the terms that we will understand in detail. These are the terms we understand in detail. So let's start with this from here onward with the slides. Hope we've seen the election part. In the same topic, we continuing session 1, day 2, part 2. Here is a disclaimer. Here what we are learning and what is the objective and what we are trying to do that. Our sole purpose of this training will be the mutual learning. If today itself, if you ask me, I am the student of the taxation. I'm learning the taxation, and we are learning together in the this workshop series also, or this text training also. So here we have election. Some typo error will be there. Here we mention the election. Okay, a revocable election. So now the first election we seen the realization basis. Similar way, there is the other election also there. So one of that is the small business relief, foreign PE branches, okay, qualifying free zone. But what is the objective here? Here our focus, our learning. Revocable election, that later on we can change, later on we can modify. What that mean? If we took one decision today, in next return, can we change this? Can we change this? So this is the revocable. Irrevocable, if we opted one time, we cannot change. This realization basis is one time, we cannot change later on. But now in election, we are understanding which election can be changed. First is a SPR. Second is the foreign PE or foreign branch. It can be changed later on. It's not lifetime. Qualifying free zone, we can change. Now with these election also we can, what is the qualifying free zone? Today we are zero rated. After 5 years, we want to switch to the 9%, we can go, we can change, or vice versa. Today we are subject to 9%. After 5 years, we can go to the 0%. Yes, we can go for 0%. So what does mean? Election is revocable. Elect for normal city regime. What is normal city regime? 9% tax. After the first tax period. Upon permanent establishment election, we can change. Yes, we can change. But these are, I'm explaining very simple way to give you the overview or the foundation. But of course, we will dive in detail and we will understand how it will be. How it will be. This election SPR, what is the SPR? If anybody would like to explain SPR. And it can be changed every year or after 5 years or after 3 years. So these will be the quiz that will be coming in your learning also. So if anybody want to answer on this. Anybody want to answer on this? What is the validity of the SPR? Up to which date we can opt for the SPR? Muhammad Asim is saying. No, Asim, it would be 31st December 2026. Okay, anyhow, this election we understand is revocable. So now which election is not irrevocable? This is the just now we seen in the city return realization basis. Okay, must be in the first city return. Must be in the first city return. Must be its first city return. Which election? And this is not revocable. What we called irrevocable. So these election in first return and it cannot be revoked. Realization basis, just now we seen if lifetime, if you opt, you cannot change. So in first return, this is the importance of the first return. Why we opt for this? What is the rationale? Transitional relief. This is also the during the first return, and this is the irrevocable. We cannot change this election. So here our learning over here, what is our learning? We have to understand revocable and irrevocable. What is our learning? What is our learning? Irrevocable and revocable. This is what we have to understand here. Which election we can revoke and which election we cannot revoke. Now the next is the relief. Election, we understand what are the election, but again in detail we will dive. But as a part of foundation, we have to cover. So next is the relief. So what are the relief? What are the relief? So in terms of the corporate tax relief, anybody would like to answer what is the relief? Anybody would like to contribute? See, if you give the wrong answer, it's your correction. It's not our correction. If somebody say wrong, then we will come to know the correct answer. So now we understand the relief. So natural person relief and small business relief. So let's see the natural person relief, resident, non-resident, both can take the relief. Both can take the relief. Here, see the point to be focused, non-resident and resident. When the quiz will come, it will come in the same way. What is the difference between natural relief is available to natural person of UAE resident or natural person of non-resident? Now, what is the further definition or the terms and condition or the compliance if you want to opt for the relief? So the natural person relief, the turnover threshold. See, these are the threshold. Threshold always on. This is the threshold. Threshold always on income, profit, or revenue. Relief always on the threshold. What is it? Profit and the revenue both are same. Profit and revenue both are same. Tax payable on revenue or the profit. Okay, so here we are saying the revenue plus other income would be tested. Other income we will understand in detail what are the part. So must be doing business with the trade license or require a trade license. Here, what is saying, we seen today the definition of the incorporated. This is the incorporated. right? We are saying the incorporated. Now, this thing require the trade license. This is the recognized or established. What does that mean? If even he do not have the trade license, if he do not have the trade license, but it require the trade license. So which means he is doing the business. So we might say here the established or recognized. Why? Because if he don't have the trade license, but as per the local regulation, he might require the trade license and he is doing the business activity. If you're doing the business activity, if he's doing the business activity, so is subject to tax. Is subject to tax. So then we have to apply the tax regulation. When? If this threshold is exceeded. So now if is under this relief, if revenue is less than 1 million, city registration is required. City registration is required if under this threshold, city registration is not required. City return is required. If city registration is not there, return also will not be there. If is not registered, did not submit the return, the payment is also not required. So up to when? So this deadline is not for here. This will be for small business relief. This deadline is small business relief. So this is the natural person relief. Now let's understand the small business relief. Small business relief, the same. It would be for resident. It would be for resident or non-resident. It would be for resident or non-resident. It would be resident or non-resident. And what is the threshold for the small business relief? 3 million. Okay. So now we let's understand what is the definition of the resident and non-resident. Okay. So in term of the resident, juridical person, if is in, already registered in the UAE, is a resident, tax resident. But the natural person, the definition, if we stay in UAE more than or equal to 183 days. Here's a different terms and condition. We will study in very detail. This is not very easy. There is each one have the different. Are the stay more than 90 days. Plus the UE national GCC UE resident being a expat, we are doing as a employment business or any real estate activities. So we are considering the resident over here also. But this resident definition or resident test is in detail we will understand. Okay. What is the another relief? What is the next relief? Cabinet decision 49. If somebody want to go and study, please go and study the cabinet decision. So what are the other relief? Here we are talking about the natural person. Here we're talking about the natural person. Salaries and wages is taxable. Salaries and wages is taxable. Real estate income of the natural person is taxable. Real estate, if we have 100 billion real estate income as a natural person without trade license, is it taxable? So this is the reason the after the taxation, corporate tax introduction, the properties earlier they established under the name of the companies, they transfer to the natural person. They transfer to the natural person. Under personal, what are the relief? Investment income is subject to tax under personal investment. No. Interest income? No. Dividend income? No. Capital gain? If you did the personal investment and if the UE company, and sale of share is not acceptable. Okay. Turnover. Here, the point, which income to be calculated when we check the threshold. This is the threshold test. Revenue threshold test. This is our learning over here. How? To test this 1 million, which income to be calculated? UE income? Yes. Foreign income? Yes. What are the other conditions? We'll see. Exempt income, dividend income, any other income. So if the from UE, let's say you are getting the 500,000 income. This is the business income. Okay. This is the business income. Please keep in mind the business income, the revenue threshold. There's a difference between out of scope and the exempt income. Okay, we will understand this overview. We'll take the example later on. The UE income, foreign income, all will be plus this, plus this, plus this. This will become subject to tax. This foreign income, if the UE person foreign income, but here the condition is that must not be generated, must be generated only using, see, if the natural person must be generated only is not must be generated. Why? Because foreign income subject to tax. If you use the UE resources, like you took the funds from here and invested over there, or given the loan over there, or employment over there. So this the reason over here they're saying it subject to the tax if you use the UE resources. Then this criteria you will part of the threshold. So if the turnover of the business, if a less than 1 million, let's say less than 1 million, from 1 million to up to 3 million and above 3 million. If a natural person revenue is less than 1 million, city registration is required. As if natural person, if no registration, no return, no payment. If revenue is more than 1 million, now city registration is required. If more than 1 million but less than 3 million. Now, see, the first relief as a natural person you opt. The second relief is saying, okay, even more than 1 million, okay, city registration is required, return is required, city payment is applicable, but you have the option for the SPR. If less than 3 million, city registration required, return required, but no payment. Why? Because SPR is applicable until this. Now the next, if more than 3 million, no SPR. Now the next concept of the investor. In terms of the investor, it can be the corporate investor, it can be the individual investor. Am I right? The corporate investor will get the investment income, normally taxable. But if the individual investor, if we do the investment, what are the investment as a natural person we can do? Anybody would like to explain? Gold, shares, real estate, any other example? What is the commonly the shares equities we are doing? This is one of the common example what we are doing, right? Okay, if we do the investment in the real estate income, if we did the investment and or we are getting the real estate income as a natural person, is it taxable? But if we did the real estate investment and we are getting the income under the sole establishment, is it taxable? But we have the benefit or we have the relief, okay, up to 1 million. This is the important factor. As a sole establishment with the license, we do this, then up to 1 million we have the relief, then is it taxable. And even then we have the SBR also. Okay, the legal person, if you're getting the taxable income, is it taxable or exempt or out of scope? Here the important is legal person. The same income, but under different circumstances is a different output. Legal person, if you do real estate investment, is a taxable. Is a taxable. Here is a relief. Here is a relief. If the family foundation, if you do the real estate investment, is it taxable? Guys, if the family foundation, how many people are familiar with the family foundation concept? Anyone familiar with family foundation concept? This is another some sort of investment. Let's understand this concept. Uh, let's say if we have the see here all the activities we are doing as a natural person. But what I did, family foundation can be established uh, by agreement without TL is a trade license or with a trade license in TIFC. Uh, there is a rack. There's a rack one for not Rakesh. There is a rack. Another name is there. The name is getting ADGMA. ADGMA. Anybody want? Normally they Rakesh is there two free zones. Yeah, rack ICC. Rack ICC. Yeah, rack ICC. Okay, if we done with the agreement without trade license is already in unincorporated partnership. But if we did the through DFC case, then we have the license. This is by default is a legal person. Legal person. But if here is not the legal person, here is the legal person. Understand the difference. Now, what the objective of the family foundation? What is the objective of the family foundation? Like we have the funds. Okay, I'll give you the example within the case, and here they mention ask him to protect the assets of honor. Yes, rightly mentioned. Uh, Family foundation is by default is a legal person, is not the transparent. You have to apply for the transparency. We didn't one practical case for the I think the Australia or the Germany investor who have the because normally what the people do, they have the funds in the European countries. It's keep subject to taxation over there as well. So they park the funds in the let's say the UAE. How they will park over here? They buy the properties, mostly the real estate investment, buy the shares and securities. So this practical example, what we dealt with them. So they have more than maybe the 100 million properties in the Dubai downtown. They buy a whole a couple of the floors as the investment, and they did the investment in the shares through the bank. Uh, Bank providing certain kind of shares and security services. So they made the investment over there, and some offline properties as well they have. So, but this is the family foundation through the DIFC. Through the DIFC, they have the uh, trade lessons. Now the trade lessons by default is we said is a legal person. We have to apply for the transparency. Uh, we have to apply for the transparency, which means the income will not be taxable over here. Over here, it will be taxable in the hand of the owner. So we applied for the transparency and we prepared the set of documents. And if the people are joined this WhatsApp group in the beginning, not recently, they might have the set of document I shared when we did this case. I shared the set of document for Family Foundation. What are the documents we prepared and applied for the Family Foundation? On this working paper, I shared. So if anybody joined the long pack, so he have the advantage to get this such working paper as well. So that is very detailed topic we'll understand. So this is the actually the concept of the family foundation. The owner have the made this family foundation, and their funds, they buy the property under the family foundation. They buy the shares under the family foundation, and they give the beneficiary, maybe their kids, detail. Okay, these are the beneficiary, and this is the profit split ratio as per the discretion of the trustee. Owner normally is a trustee also, and there's the board of directors. Okay, who run this, manage this family foundation based on the let's say the DFC regulation. This is the basic understanding. This is not the comprehensive, but as a concept, hope you understand. This is the real estate income. Okay, now here the natural person relief. This is the another important point. You guys can search this natural person bulletin from online, and you will get why we are going to discuss this? Why we? So here we said this part. Actually, this is a saying natural person relief if your turnover is 1 million or more than 1 million. Oh, sorry, 1 million or less than 1 million. What is you are not registered for the city? You're not registered for the city if your revenue is less than 1 million. But what if your revenue, let's say this is 2024, but here 2025, your revenue is, let's assume 5 million. So city registration is required. City registration is required. Guys, be active and be quick. Only the few participant is responding. Mohammed Islam. Okay. Now, if city registration is required, then city return also is required. Yes, yes, yes. City payment is also required. Yes. Okay. Now, if everything is required, so next scenario in 2026, if revenue is less than 1 million. Now, tell me, city registration, city return, city payment. So what to do if city registration is already done? So what to do? But if the FTA is saying you can take the advantage of the natural person relief if the revenue is less than 1 million. Guys, quickly. Okay, the saying city registration required done is already there. So what we do is already there. City return is required. Now they said SPR we cannot claim. Why? Because it's already SPR we cannot claim because in 2024 is already exceed the 5 million. Already exceed the 5 million. This is one of the condition SPR all previous tax period must be less than 3 million. So this condition is already breached. So SPR cannot be claimed. So now if we look over here, this revenue is less than, yes, we'll keep submit the return, but nil return. Because we cannot go for declaration. Now this restriction is forever. So we can opt the small business, national personal relief is less than 1 million as a nil return. So this is what they explain in the natural person relief. So this is the natural person. Now mostly the participants mention from where we are getting the such information. So that's why I add the screenshot. So you can search and go through that. If I read here, they mention, okay. What is saying? Turnover has fallen below the 1 million during this subsequent Gregorian calendar year. Should not deregister. This is our learning. Shall we go for deregistration or no? So we will not go for the deregistration. So once it's registered, we will not go for deregistration. This is the important learning over here. One we already learned, second is here. Unless deregistration, in which case, if this cease conducting business or business activities, only that case we go for the deregistration. They will retain their tax registration number and will require to file nil return. Now, this part is clear and this reference is there. Anybody have further question in this regard? The learning, this is very precise and comprehensive learning I'm sharing with you guys. I believe when we completing, you will have the reference as well. In anybody can ask you, you can give the reference also. Guys, so far the many participants are there, but only few participants are actively responding. I believe the proactive and the conclusive learning we have over there. You can go through in the detail also, but let's move the next part.